First up, the property you're about to buy in Houston could either make you wealthy or bankrupt you, and it all comes down to the zip code that you are buying that property. If you're new here, I am Wale Lawal. I have made Houston real estate mistakes and I've helped a lot of people to also avoid a lot of mistakes. Today, I currently own 7-figure rental portfolio and I've helped over 400 people to start and scale their rental portfolio. So you are in the right place, and today I'm going to save you a lot of headache. I will share with you 5 major zip codes that can destroy your real estate investing in 2025 and beyond if you make this mistake. So here are 5 zip codes I will never buy a rental property. If you are looking to be a real estate investor or you currently own some rental property, this is a video you do not want to miss for any reason. This zip code have a lot of issues for investors, and I don't want you to make those mistakes that countless of investors has actually made. So here is what nobody is actually telling you. Houston has a hidden landmine disguised as good deal, but zip codes where insurance and flood issues are very likely to happen are the reason why most investors actually lose money. I'm talking about areas with property where property lost their value of up to 20% of similar comparable properties in just 3 to 5 miles away from that particular zip code. So if you cannot handle this brutal truth about where not to invest in Houston, you're probably not ready to build wealth through real estate. If you're new to the channel, make sure to hit that subscribe button so you don't want to miss my next video. The zip code number 1 is 77079. This is what I call the prestige trap. Memorial sounds really prestigious for a lot of people, but it's also one of the most dangerous investment trap that most real estate investors always overlook. Sarah, who is one of my clients, owned a $420,000 rental property in Memorial area, never flooded before, great schools, great amenities, close proximity to a lot of things. Then Hurricane Harvey hit and the Army Corps released the water from Haddock and Baker Reservoir, and thousands of homes that had never seen water before suddenly got flooded. They went 3 feet underwater all of a sudden. Now you see a lot of muddy Bayous water in people's house. The financial nightmare was a lot for a lot of homeowners. As a matter of fact, Sarah's house is now $85,000 in damages, and insurance did cover half of those $85,000 worth of damages, but our property was vacant for around 8 months, and even after renovations, tenants were so hesitant to even rent her property. Eventually, she sold the property at a loss and she moved on to better zip code. Now, this is one thing you don't really realize. Property with flood history in Memorial shows around 15 to 25% lower appreciation as compared to other houses. So Sarah's $420,000 investment is now worth around $380,000 in today's market. And another thing is that buyers never forget, insurance company don't forget, and also the data is there for a lot of people to do their research when they are looking to buy your property. So I will avoid this zip code at all costs if you can avoid it, because your insurance cost is also going to go up, which is also going to increase your monthly mortgage payments, which also means you're not going to cash flow, because the more money you pay in interest, the more money you pay towards insurance costs, the lesser the cash flow you will get. So as much as Memorial sounds prestigious, but the prestige doesn't actually pay your mortgage payment when the flood insurance cost double overnight. So I will really avoid this zip code, because that mortgage can actually be a problem for you if your insurance go up overnight. The zip code number 2 I will avoid is 77006. I call this one the hidden landmine. 77006 is in central Houston and it sounds really convenient, but flood zone zigzag through this zip code like a landmine makes it a terrible location to invest if you are a rental property investor. James bought his first rental property here. He did his research, everything looks good, he was close to amenities, the number just makes sense. But 6 months after closing, his insurance company called and told him that, hey James, your property is actually located in a flood area because for some reason we skipped that during our due diligence. Now is $180. Monthly insurance became $5 $580 because his property had undisclosed flood history, which was a problem with the insurance company. Plus, his mortgage company also, skipped that for some reason. But long story short is that James is now underwater on this property, and insurance of $180 monthly became $580 overnight on James. And obviously, this property doesn't make sense as an investment anymore for James. Now, properties in 77006 that flooded show around 20% lower appreciation than identical properties that stayed dry during the Hurricane Harvey. Unfortunately, James' great deal now came with permanent damage to investment potential, and a lot of investors are actually running away from buying this property from James, while his neighbor's property of identical in nature actually appreciated for around $40,000 in just 2 years, and his own property only gained around $18,000 in appreciation just because the property had a flood history. And this is the big part: the flood scar never heals. Even when the property looks perfect, buyers always remember, insurance companies always remember, and the markets and the data never forget the history of the property. And this takes me to my zip code number 3, where I will not buy a rental property in 2025. This is 77037. This is what I call the cash flow mirage. Greenspoint is where this zip code actually located. 77037 is located in Greenspoint. I used to own a rental property in this zip code, but I sold it after 2 years because of this same problem I'm discussing with you right here. So Greenspoint looks like a cash flow gold for a lot of investors. The number always makes sense. Everything looks good. It checks the 1% rule on paper, but properties here actually selling for around $120,000, and you can rent them for $1,200. But Marcus actually learned a big lesson why experienced investors like me always avoid this kind of zip code and this kind of deal. He has 3 properties in this zip code. They were giving him constant problem. One tenant actually broke the lease because their car got vandalized twice. The next tenant stopped paying their rent and took 3 months to actually evict them. The third tenant left Marcus dry overnight. They just packed their bag and left the property empty, and Marcus didn't even find out until about 3 weeks later. They owe him around $2,400 in rent. Plus, they also left about $3,600 worth of property damage for Marcus to deal with, simply because the property is not in a good location. Meanwhile, Greensbay flooded twice as well in about 18 months, and insurance premium for Marcus also went up for around 40%, which makes it so difficult for Marcus to continue to hold on to this property. So Marcus' cash flowing property lost around $28,000 in 2 years, and he sold them at a loss just because he just couldn't continue dealing with the headache that this property constantly giving him. So what does this one mean to you? It means that cash flow investing actually works, but only where the fundamentals support the sustainable rental demand. You don't want to buy a rental property in a place where you cannot just find a quality tenant. So like I always say, the quality of your properties determines the quality of your tenant. If you have a crappy property, obviously you're going to attract the worst or the worst tenant. And as you already know, that economic distress actually creates expensive problems that disguise as a good deal for someone that is inexperienced. So please avoid this zip code at all costs. And that takes me to my zip code number 4, which is 77020. This is a gentrifying gamble. That's what I call this zip code. This zip code is located in 5th Ward. It is up and coming, they say, right? Tony actually believed this hype as well. He bought a $180,000 single family home and he renovated it for around $40,000. After the renovation, the property now worth around $250,000, which is good for Marcus because he bought it for $180,000, he put $40,000 into it. So all in for Marcus is around $220,000, but after renovation is worth $250,000, which means Marcus actually had about $30,000 equity in the property as soon as renovation is completed, because it did appraise for $250,000. So instead of the gentrification that Marcus was expecting, he actually got 3 major breaks in only 18 months of owning the property. The neighborhood thieves actually stole his AC unit, they stole his copper plumbing, even the granite countertops that Tony was proud of, they also stole it as well. The property looks like a fox nest, making it harder to rent, and no single tenant want to actually actually rent Tony's property because of the high crime location. So this is one thing you have to be careful about, most especially when properties are too cheap. It means something is wrong fundamentally. So it is your job as an investor to uncover that problem so you don't make the rookie mistakes that Tony just made. Now, this is the high crime investing reality a lot of rookie investors always overlook. Number one is the insurance premium. Insurance can go up as much as 20% than a safer neighborhood. Security measures can cost you between $3,000 to $5,000, and that doesn't even solve the underlying problem. Tenant pool are so limited because you're going to literally be begging tenants to come and take your property because they just don't feel safe, and if they don't feel safe in the neighborhood or in the property, nobody want to rent it. I wouldn't rent the same property as well, and I'm sure you will not do the same. So Tony had to sell the property for around $160,000, and he lost about $60,000 just within 18 to 19 months of him finishing the renovation. So it's a loss that he will never forget. He lost a lot of time, he lost a lot of money, he lost a lot of equity that he could have captured had he been to do the same thing in the better neighborhood. So neighborhood transformations could take decades or not months for it to happen. While I still believe in gentrification, I still believe in buying in the up and coming area, but you have to really do your due diligence and do your thorough research about that gentrification area before you actually buy there. So if you're finding value in this video, please make sure to hit that subscribe button and click the like button so I can let you know the next time I have a new video. And this takes me to my zip code number 5, which is 77019 and part of 77006. This is what I call the lifestyle trap. Montrose is where this zip code actually belongs. Montrose is very trendy, it's very hip, a lot of people love it, and it actually attracts young generation. I'm talking about your Gen Z. So Lisa fell in love with this zip code. She loved the vibe, she loves the proximity to downtown, she loved the gentrification happening around it as well. Now, this is what actually happened to Lisa. Within 18 months, Lisa had to recycle 3 different tenants. The first one was the marketing coordinator that moved from Montrose to Austin, Texas for better opportunity. The second tenant for Lisa was a couple. They stayed there for about 18 months, and after that they had to break their lease because they said their family is growing and they want a big backyard, and they moved to Katy, Texas. The last one was a recent college graduate from University of Houston. He stayed there for just about 6 months, and he said he got a better job in Boston, and he had to move from Montrose, which is Lisa's property, to Boston for a better opportunity. So within the space of 18 months, Lisa had to recycle 3 tenants, which is a terrible thing for a long-term investor like Lisa, because the longer you can keep a tenant in your property, the better cash flow you get, the better stable proper investment you have, among other benefits. When you have to recycle tenants every 3 to 6 months, it is a problem. You don't want it. You want tenants to stay in your property for as long as possible. And for Lisa's experience, she actually recycled this tenant, and every time she had to go through a changing of tenant, it's costing her around $2,800 to get the next tenant into her property, and she had to do it again, and it cost her another money. So cash flow projection, which was based on 12 months, actually became around 8.5 months, as you can see from my experience. So after 3 years of turnover and stress and headache, she decided to sell the property, and she went to buy something in 77429, which is in Cypress, Texas. Of course, she sold the property at barely breaking even, but because she had it for about 3 years, if she had sold it under 3 years, she would have lost money on that property simply because she bought in the trendy area where a lot of people want to live. So don't confuse places you will want to live with the places that generate stable rental income. They are 2 separate things. There are some neighborhoods that are meant for, hey, lifestyle, let's live here. There are some neighborhoods that are meant for rentals where there's a lot of rental demand. So where are the smart money actually going right now? Where are smart investors buying property? I'll walk you through 5 zip codes where smart investors are still buying rental properties in today's market that will help you to be a smart investor. I'm talking about areas that actually build wealth, not the one that lose wealth for you. So the first one is 77429, Cypress, Texas. This is where Lisa actually bought her property. So she's currently owning about 2 rental property in this zip code, and she's loving it because everything she has gone through with the other properties, she's able to correct them with this current property. Our insurance is very reasonable. Families love the area, they love our property, and they are now staying there longer as compared to our previous experience. Above all, this neighborhood actually appreciates better than where she had a property in the past. And not only Lisa, I've helped countless of people to also buy property in this zip code. As a matter of fact, I do own property in this zip code as well because of all the reasons I've mentioned here. The second zip code you should buy property is 77301, Conroe, Texas. James actually relocated from this place. He moved all the insurance money they gave him to buy a single family, a 4-bedroom, 2.5 bathroom right here, and he bought a new construction, by the way, with a lot of builders incentives. So now James is a happy landlord with a long-term tenant in place, and so far the tenant has stayed there for about 7 months, and they have signed about 2-year lease because they see themselves living in that property and living in that area for a longer time. And I'm sure they're probably going to renew their lease at the end of their lease terms. The third zip code is 77389 and 77373. This is known as the best rental zip code in the entire North Houston. Marcus actually simplified his strategy. He bought a 1 quality single family home, also a new construction, and he has been owning this property for the last 2 years, and the same tenant are still in his property till today. The third one, or the fourth one, is 77377, Tumble, Texas. Tumble is fast growing right now, and a lot of smart investors are actually buying here. I've helped about 5 people to buy in this zip code, and they are loving their properties. And also, if you need my help to do the same, I can actually help you to do the same. And we also find you a stable tenant because people love to live here because it just supports their lifestyle and their growing family. And also, the crime rate in this place is extremely low. I would say it's almost zero because people just love it, and there's a lot of things that are working here because these are mostly planned community with HOAs, and HOAs are enforcing the rules and regulation. So overall, these areas actually offer job growth, population growth, very good schools, low crime rates, and tenant stability because tenants want to really live in this place for as long as possible because it supports their lifestyle and it supports their family growth. So here is the $1 million lessons for you. This is what separates the wealthy investors from the broke ones. The wealthy investors buy in zip codes where economic fundamentals actually work for their investment, not against their investment. That is a place where tenants want to live. No matter how cute your property is, if no tenant wants to live there, obviously you don't have an investment, you don't have an asset, you have a liability. Now, the poor investors always chase the deal, they always chase the cheapest property, but the rich one chooses location and tenant pool over cheap deals. Poor investors focus on purchase price and they want to buy the cheapest of the cheapest deal they can find, while rich investors actually focus on where the economic fundamental supports their investment goal, and they also look at the total cost of ownership. Poor investors also hope for appreciation. The rich investors buy where the appreciation is driven by measurable factors. So don't let that cheap price of a house to blind you from expensive problems. The deal that have saved you $50,000 upfront but cost you $100,000 in problem isn't a deal at all. It is a disaster that came with a discount. So if you're a serious investor or ready to be an investor and you need my help, I can help you as I've helped countless of people to start and scale their rental portfolio. I'm talking about serious people. If you are ready to take action and you are tired of watching videos upon videos or watching other people to succeed around you, but you are also ready to get results as well, I welcome you to jump on my calendar, schedule a consultation on my calendar. You will find the link in the description below where I will be able to dissect your specific situation and help you come up with a plan to make it happen for you. We analyze your goal, we analyze the deal for you, and above all, I will be sharing my personal experience, what has worked for me, what has not worked for me, where I've made a mistake and where you should avoid it. I'll be sharing them with you, and hopefully you'll be able to take action as a lot of people has taken action already. Now, this isn't for a bargain hunters or people who just think they can just outsmart the system by buying the cheapest properties. This is for serious investors who understand that paying more or paying market value for a property at the right location build more wealth than buying in a cheap zip code with the wrong tenants. Thank you so much for watching till the end. I do encourage you to subscribe to my channel and click on that notification bell so I can let you know the next time I have a new video. I do put about 2 videos on this channel every single week, and I don't want you to miss them, especially if you're looking to build wealth through real estate. This is a channel that you will find a lot of value in. Now remember, the zip code determines your financial future. You want to choose wisely because Houston markets reward the prepared and punish the hopeful. Before you go, I want you to watch this next video where I walk you through 8 smart steps for you to research and buy your rental properties like a professional. If you watch the video and you follow what I discussed there, you will be glad you did. Thank you so much, and I will see you in the video. Bye-bye.